Hey, Kyle, it's very good to see you. As you know, US equity markets keep adding to their all-time highs. The Dow, the S&P 500, the Nasdaq, they all just recently set new closing records. However, some strategists are saying that we may be closer to the ninth inning versus the first. So is now a good time to take a step back and consider rebalancing our portfolios?
Yeah, Erin, great point. I do think it is a great time to take a step back and look at what's in your portfolio and potentially rebalance. Most people think of portfolios, they think of stocks and bonds. So 60/40 is the classic example, right? But, you know, if you look at the last, year plus, right? The S&P a year ago was at 3,500 points or so. And right
Right,
now we're up over 4,700. I mean, that's an
right,
unbelievable period of growth. And in that same period of time, bonds are down slightly across the
right,
board
right.
for the most part. They're flat or they're down. And so your 60/40 portfolio is probably not a 60/40 portfolio anymore, just like that graphic demonstrates. So um, it is important to rebalance from time to time. And, you got to keep in mind that I don't necessarily agree that we may be in that ninth inning. I think there's still maybe a period of growth here.
Yeah. It's important to look at it to just to manage the risk again, right? Because I know you say
Yeah.
diversification is always very important, which leads to my next question. If we are though facing economic headwinds, would you recommend rebalancing toward value, cyclical, and international equities?
Well, you know, like you just said, diversification is so important and it's more and
Right,
more important than ever.
right.
If you kind of dissect those assets real quick and look back, value in 2020 got completely crushed and took a
Hmm.
long time to recover. You know, you had international equities that have been pretty rocky and so have cyclicals. And we've actually seen people fly to safety in mega cap growth stocks, which
Hmm.
we're not used to seeing in the past. So a lot of the traditional narratives that we've seen for these different types of equities have actually been flipped on their heads. And so staying disciplined and not overextending on any one category, I think is imperative.
Okay. All right. One more thing that I wanted to show you because this is maybe my favorite graph of the year. I want to take a look at asset classes year to date. Biggest returns here Bitcoin, Kyle. I should have bought 10 years ago. Keep saying that. Oil, commodities, but stocks again still really high on this list. What sticks out to you here?
So two things really stick out to me here on this. One, it's the huge returns of non-traditional asset classes and emerging asset classes.
Yeah.
As portfolio managers, we always look at, alternatives that we can include in portfolios that make sense.
Hmm.
And I mean, those have really shown over the last couple of years. The other thing that sticks out to me is bond returns. I mean, you can
Yeah.
see again, really unspectacular. A lot of conversations I
Negative.
have with bond investors have been, I can't believe I held bonds through 2020 because I look at these other returns and they get frustrated, and so
Yeah.
I have to remind those folks that you don't buy bonds for home run returns every year. That's not their role in a portfolio. I still think they're a viable role in the portfolio, but you really have to take a step back and look at your fund managers and your mutual funds and your ETFs on those bond funds. And the
Hmm.
most important things you have to keep in mind, you have to look at the duration of those bonds. We're heading into a rising interest rate environment. I'm
Right.
not going to go rush out and buy a bunch of 30-year bonds right now if that's what I'm looking at.
Yeah, that makes sense, Kyle. One more thing that I think is important to note here, and this is a conversation you said you've been having with your clients throughout the year, which is the tax implications of all this.
Yeah, yeah, absolutely. 2020 was a huge year for these growth stocks, tech growth. I mean, it was out of control. And depending on what type of account you're trading in, you may actually be seeing, you may be dealing with some capital gains taxes.
Mm,
And so some investors get stuck in a spot where they're like, oh, I've got so many gains in this account and these particular holdings. I don't necessarily want to sell just because I don't want to pay the taxes. But that is not a good reason to keep your portfolio out of
yeah,
balance. You may end up sacrificing some of those gains. So I think there's a bit of a balance between the tax side and the rebalancing for sure.
right. Definitely sounds like it should be a conversation that you're having with your financial professional. Kyle, if somebody would like to ask you more questions about their portfolio and maybe their percentages right now, what's the best way to reach you?
Best way to get in touch with us is through our website. You go to firstcoastfinancialgroup.com and you'll find a way to contact us.
All right, that's great. Kyle, thank you very much.
All right. Thanks, Erin.